Finally, there is good news. The largest wallets, the whales, are accumulating Bitcoin. Now in this video, we are going to look at various on-chain analytics. We are going through many different charts and we try to find out, does it make sense to now accumulate as well, or does it make sense to be somewhat cautious? So here's the good news summarized in a picture that was published recently by Glassnode. At the bottom, we see the Bitcoin price starting in Q3 of last year. So this is pretty much 1 year of data. What we see at the top is a segregation of different Bitcoin wallet cohorts. So the bottom line shows wallets that have less than 1 Bitcoin. The second line shows wallets with 1 to 10 Bitcoin, etc., all the way up to 10,000 Bitcoin. Whenever we see blue, that means that this wallet cohort tends to buy, tends to accumulate. Whenever we see red, we see that they're selling or moving away their Bitcoin. Now, the first thing we notice is that the smart money, as in the largest wallets, tend to buy early. So have a look at this in February of this year when Bitcoin moved from 40k all the way to above 70k. The largest whale wallets, they tended to already buy while retail distributed. Once retail started to buy in as well, Bitcoin was already quite elevated and didn't rally that much anymore. What we can see since the middle of July is that again the whales tend to be buying in. And now slowly the smaller wallets tend to also jump on. But again, there's purchasing by the whale wallets and this tends to be good news. There also seems to be a connection between wallet size and holding duration, as in the wallets that tend to hold longer tend to also hold more Bitcoin. Since April of this year, we tend to see the long-term holders buying back in. They sold quite a bit during the rally up to 73,000. But since Bitcoin doesn't go further, the selling by the long-term holders has also stopped. Now, I personally like to look at long-term versus short-term holders slightly differently. I like to use look on-chain for that. So feel free to check that website out. It's called lookonchain.com. This is the Bitcoin hodl waves. And what we are seeing over here is the percent of Bitcoin that is held by wallets that haven't moved their Bitcoin for at least 6 months. And we tend to see this going down whenever we are in a bull run in Bitcoin, right? The long-term holders tend to sell to the short-term speculative money. And we tend to see this going up during a bear market. And it always bottoms out whenever the price peaks. What we also notice is that whenever this measure is very high, we tend to have positive following price movements, right? We've seen this over here. We've also seen this over here, right? Subsequently, we've seen our rally. And when we zoom out a little bit, we look at the current price. Unfortunately, the current level isn't at all-time highs. Now, here's how I interpret this data, right? When a lot of Bitcoin is held by the long-term holders that tend to not sell that quickly, that diminishes the liquid supply. And when the liquid supply is very tight, then just a bit of additional capital can move up the price a lot. Once those long-term holders move their Bitcoin to the market, there's way more liquid supply. And that's the point in time where then the Bitcoin price can potentially fall. Unfortunately, we aren't at all-time highs in illiquid supply. And so in my opinion, this isn't necessarily the start of a bull run similar to 2015 or to 2019. We might just be hovering along for a while. Because again, quite a lot of long-term holders have already sold at the 72k mark. My general thesis is that Bitcoin and crypto in general moves very much with psychological waves. As in, you as an investor look at your average cost base. You look at, is your portfolio currently in the negatives or in the profit? If you're currently massively negative, you tend to not sell that quickly, right? You tend to potentially wait it out, especially for assets where you are long-term bullish on. If you're just holding a random obscure small altcoin, you might still cut your losses. But if you hold Bitcoin, you probably think that this will recover in the next 5 or 10 years. And so the main tool that I use to determine whether or not we are currently super cheap or if we are not that cheap is what the average cost basis of the market is. If the current price is below the average cost basis of all of market participants, we tend to be super cheap because people don't want to take losses. And whenever the current price is above the average cost basis, we might still go lower. So the average cost basis here is in blue. And just have a look at this, right? When the price was below that average cost basis, selling pressure suddenly started to subside somewhat, right? This was during 2019. This was during the COVID crash, and this was here after the FTX collapse. There's also an orange line. This is the active investor cost basis. You can see how that's not necessarily always marking the bottom of a bull market, right? It might just be a good support during the short term. And that short-term support is currently at 51K, but the average cost basis is still at 31K. So really, buying Bitcoin now is betting on the current momentum to continue. Unfortunately though, there are some metrics suggesting that the momentum isn't as healthy anymore as it used to be. So again, the average cost basis here is in blue, and we can actually measure the difference of the current price relative to that cost basis in relationship to the volatility, in relationship to the ups and downs of the market. And that measure is over here. It's the market value to realized value Z-score, the MVRV score. Whenever we are below the realized price or the average cost basis of the market, here now in light blue, it tends to be a very good buying opportunity. So this is when we are also in this green area here. Whenever we are above, it makes sense to look at potential exit opportunities at some point. Now here is why I say the current momentum is not as constant compared to prior bull markets. In prior bull markets, we simply just continued to go up until we hit a climax and then we crashed down. But in the bull market from 2019 to 2021, we once were depressed, but then didn't hit all the way to the top. We went back again to the realized price. It does appear to me that we might see something very similar to 2019 again, right? We only went halfway up and now we tend to trend downwards. We tend to get closer to the realized price again. And again, that realized price is currently at 31,000. This needs to go to 1 million or March buyers now will make millions. This is how you get the clicks on YouTube, but this is not how you beat the market. To beat the market in crypto, you need to be better informed than the rest. You need to be better skilled than the rest. You need to do better blockchain analytics. You need to track other people's wallets and know what is the smart money doing. It's the boring educational content that forms skill that doesn't perform so well on YouTube though. That's why I created the premium membership. Feel free to check it out. We are tracking influencer wallets to find out what they are buying before promoting this on YouTube. We've got a lot of tutorials to help with on-chain analytics, to help with wallet discovery. And of course, there are also plenty of chats where we help each other and also one-on-one conversations with me. So I'm messaging every premium member one-on-one directly. Once you're joining, you will get a message from me and you have the opportunity to directly pick my brain. Feel free to check it out. thebitcointrader.com, link is down below. So when does it then make sense to sell during a bull run? Because we are above that average cost basis, above the realized price during the entire duration of a bull run. At what point in time does it make sense to sell? There's two potential signals. One signal is the spot cumulative volume delta, the CVD. The volume that's not on exchanges tends to peak when the price peaks. Whenever this is going up, the subsequent price action tends to be rather lackluster. But I think there's an indicator that's even more powerful, and that's the value days destroyed multiple. That tends to turn red whenever the long-term holders of Bitcoin sell. So what are value days destroyed? It's simply just when you don't move, say, 1 Bitcoin over the course of 1 year, and then after 1 year you're moving it, you're destroying 365 days of value days. Now, if you've got 2 Bitcoin that you haven't moved for a year, you're destroying more than 700 value days. And so by measuring how many value days get destroyed, we can see what the long-term holders, the long-term whale holders that tend to be diamond hands, what they are doing. When the diamond hands, the diamond whales are suddenly selling, that's a potential selling signal, right? Because they normally don't do anything. And so this tends to peak very nicely whenever the price tends to peak. And this is how I sold the top. Because have a look at this. This turned red on March 11th at 72,500. And 2 days afterwards, we had our all-time high. And so that's why I believe this on-chain data is super useful. You can't see these kind of things just in price charts, right? But we have more information with on-chain data and we should use that information. It's not just random signals that we get. It's additional information that we should be taking advantage of. Now, even though we see now the big whales accumulating Bitcoin, I'm actually not that bullish. And again, that's because of the average cost basis of the market. And it's also because of long-term versus short-term holder dynamics. Because again, I believe we are in a very similar situation to the middle of 2019. So when we first recovered from 3.5K to roughly 12K. We then went down again during the COVID crash by almost 70%. So this here was a 70% drop. And what we see here, this wave is the realized cap hodl wave. So this is not holder waves, this is profit taking. And this is profit taking by the wallets that usually don't move their Bitcoin for a minimum of 6 months. So this depresses very much when we are at the top in the Bitcoin price, and it tends to peak when we are at the bottom in the Bitcoin price. And just have a look at the middle of 2019. We didn't go all the way down, as in the price didn't move astronomically high. And so there was somewhat of a mix between long-term and short-term holders. We then saw the price go down. We saw the long-term holders taking over. And then with the final bull run up to 63K, I believe, that's when we saw the long-term holders really selling off. And this was the perfect selling opportunity. In other words, you want to sell when it's all the short-term holders that speculate. You want to buy when it's the long-term holders holding most of the supply, because then liquid supply is very, very scarce. And what we currently see is unfortunately a very similar situation to the middle of 2019. We see how the long-term holders sold off. We see the Bitcoin price somewhat stalling. We see the long-term holders not selling anymore. And we are above the average cost basis. So maybe we will see a very similar cycle. Maybe we even see an external macro event again. This was the COVID crash. Maybe we see now recession fears in the traditional markets. If the liquidity crunch is hard enough, also spill over to Bitcoin. Let's just toy around with that idea. What we have over here is the COVID crash. We've got our recovery from 3.5K all the way to 12K. Let's say we have something very similar happening. We didn't see a massive bull run yet, right? We didn't really strongly surpass the prior all-time highs. Let's say the buying pressure isn't strong enough and we see something similar to lackluster price performance before COVID. Let's overlay this and see what we get. Here's the kind of volatility that I believe is totally possible. Falling to 34K, maybe temporarily even to 27K, I think is a possibility. And once we are at those kinds of levels, people will be buying again. Are we then strictly afterwards shooting up to 200K and 300K? Who knows? Because obviously there are diminishing returns in Bitcoin. But is there currently risk in the market that we could potentially fall quite a bit? I believe yes. I think it makes sense not to be 80% in meme coins. I believe it makes sense to be somewhat hedged and to potentially also have other asset classes, maybe own some long-term government bonds, maybe own some gold, or potentially even just hold some pure cash to then be able to buy the dip very quickly. Feel free to share this video with your friends. Feel free to also give this a like. It helps the channel grow. In case it's your first time here, feel free to subscribe as well. I publish videos regularly. In case you've got Telegram, then you're more than welcome to join. The link is down below. It's 100% free. Looking very much forward to chatting with you. Cheers.